Looks like nobody's joining today as well. I think so. Let's wait for a few minutes and see if somebody will come or not. Oh, hello, hello. Only one viewer. Okay, three. Oh, now we have two, three viewers. Let's see if some more people join in or not. Okay, two people came. So today's topic is going to be about the pullbacks and the risk management. And looks like nobody else is coming. So should I get started or not? Just type in the chat and then we'll see if we should start or not. Just type in start or not. And can you hear me, guys? By the way, can you hear me? Okay. So let's get started anyway. Okay. So in the last stream we discussed, so we'll do the same. We'll start with, a little bit of broader market review, how it performed and what is the future possibility. So last time, as we discussed, so this was the pivot point that we identified, this low of this reversal candle after the 3 days down move at this particular point, and that was also the 21-day moving average. And as you can clearly see, the market moved up from there and crossed the previous swing high, that was this particular area, that is around 18,460, and crossed that, right? So this is the chart of the Nifty, and even if you look at the mid cap as well, so mid cap is also at the all-time high level, and it bounced back from here. So this was a low that we identify, that the market shouldn't go below this particular level, and as we assumed, the market did exactly that, and it started going up. Same was the case for the small cap, but there's a little bit of weakness in case of small cap as compared to the mid caps and the large caps, especially the Nifty. But if you see, Nifty 500 also did the same thing, and both are very few percentage below their previous all-time high level. But one thing that I noticed, even though the Nifty and the other indices like the mid cap, all of them are at all-time high level, I'm seeing more setup failures. Has anyone else observed that? Okay, you guys can hear me. Okay, voice repeating. I don't know why is that happening. But do tell me if this issue persists or not. Right, so this is the broader market review. So again, for now, this is our new pivot point, this particular level, again from where the Nifty bounced back, even if we just look at the Nifty, and there is a possibility that my market might consolidate here. But if we look at the Nasdaq, which performed really well, if you see the US market, look at it also pulled back towards the 21-day moving average, and after that there was the gap up, and then there was this huge follow-up move that was on Friday. So giving the global cues, I think the Indian market will also follow and continue its upward journey for now. But again, one thing that I have noticed, the broader market, Brett, there are more setup failures that I have started observing from last few days. Yeah. So let's come down to the today's topic. So what are pullbacks, right? I have these few stocks that have in this watch list that gave a very good pullback move and very picture perfect. So what is a pullback, right? So first we need to understand what is a pullback. So as we all know, what is a breakout, right? So breakout is a stock is just consolidated in a consolidating in a range, right? And then it crosses the particular resistance level, that is what we call a breakout. And after that, what happens, any stock, right, it never moves in a straight line. So the it always moves, this zigzag type. So what is a counter trend movement? That is what we call a pullback. So suppose, as I said, this is a breakout, right? So after some time, what the stock will do, it will come down like this and again starts its upward journey. So this movement that happened at this particular area, that is what we call a pullback, right? So why does a pullback happens, right? So for there's a very simple reason for pullback happening. So there must be very short term bias. Some people buy for very short term, like the swing or the positional, or some people buy for the long term as well, right? So those who buy for the very short term, right? So suppose this was our breakout area in a particular stock, and people who bought it here or maybe at the lower price, at some point they will think that we should book some of the profits, right? So at when they are booking profit, so that is the point where a little bit of selling comes and the stocks starts going little bit down. So that is why a pullback typically happens when there is a profit booking, or maybe there's an overhead resistance at a particular point, and from there, suppose, right, so stock was in a downtrend and there was a base formation, and then there was a breakout, suppose, right, there was a breakout. So this particular area, there's already some bit of selling, the previous there is a chance of selling coming in, because there might be some trapped buyers here. So that's why the stock will fall a little bit, and then again the fresh buyers will come and the stock will start going up, right? So it's clear, right, what is a pullback, right? Just type it in the chat section. Hi everyone, hi whoever is joining, right? Just type it in the chat section if it's clear what is pullback. Then we'll go to some examples and see how we can trade a pullback, right? Let me remove all these markings. Yeah, just type it in the chat section if it's clear or not what a pullback is. Okay, so I'll continue. So there are multiple reasons, there are multiple ways that you can trade a pullback, right? So let's take an example of this particular stock. As you can see, this is the Som Distilleries and Brewery Limited, SDBL, right? You must have seen this stock. So as you can see, there was this big cup and handle type of formation that formed right here, right? And then there was this breakout, this particular breakout right here, right? And after that, it went up from this, after the breakout, it went up from 144 to around 162 something, and after that you'll see it suddenly fell, right? Look at this sudden fall, right? And but again after that, it never went below this particular level, and again consolidated a bit and again resumed its upward journey. After that, sometime again it consolidated, and then there was this clear breakout here from this particular range. There was a very short range formation, and after that the stock moved above from that particular range. And also look at the volume during the range formation. So this is the typical so if you are a breakout trader, so this is the kind of areas that you should be looking for while entering a stock, right? So that is for the breakout traders. So the stock broke out from this particular level of around 177 something, and it moved up to 195, and after that you'll see it suddenly fell and again started coming down and down. So this is the point where I posted about it on Twitter as well, right? This was the pullback towards its 21-day moving average. So why the moving average, right? So there's an important concept that you need to understand in case of the pullbacks, that is called the mean reversion. So what is the mean reversion is, right? uh, there's a average value or the mean value associated with every stock, right? If a stock so that is derived by even the moving averages. It just tells you the average movement of last particular days, whatever the moving average is, right? So in case of 10, it tells you the last 10 days movement average, and for the case of 21-day moving average, it tells you about the last 21 days ka average. So that is kind of a mean value, where after some time, even if the stock goes away from the mean, there is a very high chance that it will come back to the mean and test it, right? So that is another way that we can guess the pullbacks that it will take support at its, short-term moving averages. In case of the daily chart or the swing trade, if we are looking at, swing trade, so our perspective is just for few days to few weeks. For that, we mainly use the 21-day moving average. So whenever a stock is pulling back, there's a high chance that it may take support at its 21-day moving average or the 10-day moving average. So the main difference is between these two is when a stock is a very fast mover, right? A stock is a very fast mover, so there is a chance that it uh, it will test its 10-day moving average instead of the 21-day moving average. So every stock has a certain characteristics, every stock has a certain different characteristic. Some stocks, as I said, the fast movers, they stay away, they're very short term moving average, that is the 10-day moving average. So sometimes they may just test their 10-day moving average and again bounce back. So as in this case, this is not that kind of stock, and it has tested its 21-day moving average multiple times. So again, this time also, my observation was that after the breakout, the stock is pulling back, and there is a very high chance that it may take support here. And another interesting thing that you need to notice during the pullbacks, look at the volume activity during the pullbacks. So this was the breakout and the up move, and look at the volume here these 2 days, on the 5th May and the 8th May. And after that, when the stock was pulling down, this particular movement here, look how the volume started falling, right? You can clearly observe here there is a fall in the volume, right? So during this so if we check the volume, so during this particular day on 8th May, the volume was 702,000 shares, right? And during this fall, the volume fell to as low as 151,000 shares, right? So you can clearly see there is a fall in the volume. And again, the stock was not breaking the this breakout candle ka low. The stock was not breaching this breakout candle's low, and it just stayed away from that particular low and just consolidated in a very small range. And then there was the near test of this 21-day moving average, and first green candle appeared after those 6 days of selling, right? So that was at that particular point my risk was very low. Why is that? Because I can just keep my stop loss at the candle's low, right? Suppose I'm entering at the near the closing of this particular candle, because I need some bit of confirmation that the price is bouncing back from that particular level after a fall, right? So even if I entered at the closing or maybe during the day, I can keep my stop loss. If I'm a aggressive trader, I can keep my stop loss at the candle's low, or maybe few points below the 21-day moving average or this last particular breakout candle, right? And what happened after that? So my guess worked at that particular point, uh, and after that it started going up, and you can clearly see it is up around 20% from that particular level, right? So is that clear? Yeah, I'll come to that, how to differentiate between a good pullback and a bad pullback. I'll come to that. So just type in whatever I said till now. Is it clear or not? So this is one of the example, right? So there is also another way to catch the pullbacks. One is the moving average way, right? uh, so in that case, when you are doing swing trading, so these are the two main moving average. I like to prefer the 21 more as compared to the 10, because 10 is a very short term moving average, and you have to give price some time to consolidate like this, that as it happened in this particular case and here as well. And again it is consolidated again, and the moving averages is catching up. Yeah, strong stocks does not pull back much. That is true, but there might be some minor pullbacks, because again, as I said earlier as well, because there are some buyers who enter at the breakout level. So there are not there are different participants in the market. Some have a long haul view, some have the short term view, right? So those who have the short term view, they might be booking some profits at that particular point. So that could also lead to a very small pullback. And you are right, strong stocks don't pull back much, but little bit of pull back, 3 4 5%, even the 6% is not that bad, and especially as long as it's not breaking the low of the breakout candle. Yeah, definitely confirmation at the pullback. So again, for that, there are two, three ways, right? First of all, a stock is pulling back. While the stock is pulling back, you won't know if it will stop there or not. Suppose, for example, this is the chart of the RVNL. I'll show you here, right? So again, so here, after this very strong up move from around this 80 level to 144 level, the stock gave 82% kind of a move, and after that the stock pulled back little. As I said, there will be many people who were booking profits, and it also looked picture perfect, because again, if you see, the volume was also coming down while the stock was pulling back, and again it tested its 10-day moving average here, and then it gave this kind of a reversal candle, which gave a little bit of confirmation, right? Again, because the stock is at 10 EMA, and there's this reversal candle as well, and the volume also rose during that, because if you see the difference between these two volume here, during this candle, the volume was 4 million, and during and on the next day the volume was 51 million. So you can clearly see the difference, right? So again, it is giving you kind of a confirmation, but there was no follow up activity after that. The stock fell the very next day, and again started heading lower. Again, there was some bit of again, it is giving some bit of hope here, because this time it's taking support at the 21-day moving average. So in this case, so there are you can never confirm at at a certain at a single candle, that if a stock will pull back and reverse from that particular or not. All you can do is manage your risk, right? So as you were asking me, your question was confirmation if you are taking entry at a pullback or not, right? So as in this case, I was telling you about this case. So this particular candle here gave a very very compelling entry point here. So what you can do is you can enter at that point, keeping the stop loss at the candles at the reversal candle low, right? Because that was the perfect here. So your risk, you lose some, because again, if there's a no follow up activity, there's a no follow up activity after the reversal, as happened in this case, the most it will get your stop loss, right? So your stop loss is already 2-3%. So you must be willing to take that much loss. Again, as I said, again, it is kind of a giving another pullback opportunity. So what I can do here, if I want to enter here, suppose I want to enter here at this particular level, I'll just keep my stop loss at this particular candle's low. So again, how much I would be losing if I enter here? Again, 4 5 max to max 5% if I keep my stop loss bit below this particular level. So you must be willing to take that much loss while trading these kind of setup, even the breakout setup as well, right? So there is no way to avoid that. But again, as you said, to get a strong, how do we know about the stronger pullback if it reverses? So the pullback, while the stock is pulling back, the volume activity should be like this. The volume should be going down and down and down, right? And there should be a reversal candle, right? There should be a reversal, and that should be combined with volume, what happened in this case. And after that, suppose you enter, suppose you want to buy a pullback, just don't enter the 100% quantity right at the reversal candle. Wait for if the stock confirms that or not. Divide your trade into chunks. Suppose I want to buy, let's say, 100 200 shares of this particular stock. Suppose we take example of this. So I enter around 30 40, at least 40% quantity at this level, this candle. And if there is a follow up activity next day, I can add another 20-30%. And once it crosses the previous swing high level, that was this was the swing high in this case, I can add the rest of my quantity as well, because that way I can manage my risk. I'm also not taking too much risk, and slowly I can pyramid up my position as well. Yes, we can also use the VWAP as well. So you asked how to trade strong stocks on pullback, like entry point. Yeah, okay, so I'll be coming to that. Right, so this is another example. So again, we have another example here, the global spirit. So here, this was the original breakout point, and the stock gave a very strong up move from 910 to around 1040, and again after that it pulled back and took support at uh, 10 EMA. Right, so it is a clear stock. Look at the volume activity happening, and as I said, to get a perfect pullback during the consolidation or the pulling back moment, when the price is coming down a bit after the initial breakout, the volume should be going down, as happened in this case, and then we have a reversal candle. So how will you trade this, right? So during the day, if you are getting such kind of candle, so there are two ways. If you are an aggressive trader, so you'll enter during the day, or maybe if you're a passive trader, you're not very aggressive, you can wait for the closing as well. Like suppose you waited for the closing, so you would enter at this particular 1026, and you can keep your stop loss right below this particular level, right? So that would be around a thoda large stop loss, that would be around 7% stop loss, uh, right? But you don't have to enter the full quantity. As I said, you can enter rest only if there's a follow up activity, right? Or maybe the stock behaves like this for few days, it just consolidates within the this candle's range. You can enter rest of the quantity once it crosses the previous this swing high level as well. That is how you manage the risk while entering the pullbacks. Yeah, one more thing that we can do is using the VWAP for the pullbacks, right? So there are two ways to use the VWAP, right? And you can use it on daily chart or hourly chart, or maybe another chart. I'll talk about the VWAP bit later. First, I'll show you another way you can use enter to identify the entry points for the pullback. So one, we learned about the 10 and 21 day moving average in case of a very short term trade like a swing trade, right? And in case of positional trade, suppose a positional trade, right? So you can use the 50 EMA instead of the 10 and 21, because again it is a very closer EMA. So for example, this particular stock that is Jamanland Setia. So instead, because again I won't be using the 10 and 21 in this way, because as I said earlier, the stocks have certain characteristics, right? They behave in different way, and this one is a very choppy, this one has a very choppy behavior. You can clearly see it has violated its 10 and 21 day moving average again and again and again. So in this case, I'll be using the 50, right? So this was the initial gap up point from where the stock started moving, and then there was the pullback towards the 50-day moving average, and then again it went up, and again there was the pullback towards 50-day moving average, and then the next day the reversal candle. So if I want to enter, I'll be entering at this particular point, again the pullback towards 50-day moving average, and then the reversal. Now again the stock is coming back at the 50-day moving average, but this time you can clearly see there is some bit of change in the character of the stock, right? Because last two times you can clearly see it bounced back really quickly from the 50-day moving average, but this time it is spending some time here. So the more the time spends at a particular support level, there's a higher chance that it may get broken, right? So again, I'll be waiting for a confirmation candle instead of aggressive entry. Confirmation candle like this before entering, like it gave in this particular level back then. Right, so another way to identify the good pullbacks level is using the Fibonacci retracement, right? So we have another example, this Zen Technologies, right? So again it pulled back towards it 50 EMA, and then there was the gap up, right? So gap up is again telling you there is some bit of strength, right? So again, if a stock is pulling back towards any MA, and after that there is no reversal candle, instead the stock gaps up again, so that is another good entry point. And here we'll simply use the gap entry rules. You can enter at the gap up, right? And or maybe you can wait for the closing as well, again, if you're not a aggressive trader, and you can keep the stop loss, near the lower boundary of that particular gap, right? So that is if we are looking at the larger move. But again, we can also use the 10 and 20 one day moving average. Wait a second, I think so I removed the 10 and 21. So I was talking about the Zentech, right? You can use the 20 and 21. So after the initial gap up, suppose you don't you were not following it during this activity, and you identify only it after the gap, right? So you entered at the gap and the stock is going up. Again, it faced resistance at this particular level, tried to break out, but again started coming down. Again, look at the volume activity, right? Again, it pulled back towards its 10 EMA, didn't went below the low of the breakout candle, and then there was another reversal candle. So that is your perfect entry point at that particular level, with your stop loss right at this low, uh, right at this low of this candle, or maybe below this small base formation here, right? Or another way you can use is the using the Fibonacci retracement. And how to do that? Just connect the points of swing high and swing low. So this was the swing low point, this particular area was the swing low, and this particular area was the swing high. So I'll just connect these 2 points, and these are the focus area for a Fibonacci retracement. These 3 are the focus areas: 0.38%, sorry, 38%, 50%, and 61%. So these are the 3 areas. So as you can see, it bounced back from the 50% retracement, right? Again, if I show you another example of this, let's suppose, let's take as example of this Apollo. So after the initial base breakout from here, you can clearly see a very good base formation here, a small handle as well, and after that gave a very strong up move, right? Was well above the 10 and 21 moving average, and then there was some bit of profit booking, and the price started coming down and started forming a base, that too right above the this 10 moving average. And look at the volume activity during that particular point, right? So again, you can see there's a small base formation. So once you get a base formation, the price is breaking that particular base, or when the price is bouncing back from the MAs, or you can use the Fibonacci retracement as well, connecting the swing low and the swing high level. So as you can see, this time also, this time it took support at 38% retracement, as you can clearly see, and from there it reversed. So these 3 are the main levels, these 3, 38%, 50%, and 61.8%. These are the 3 levels in the Fibonacci retracement tool that you can use to add on the pullbacks. Again, I'd be saying wait for the confirmation candle. And what is a confirmation candle? This kind of a particular reversal candle, that too should be combined with greater volume as compared to the volume during the fall or the small contraction. Wait a second. Yeah. So any more questions regarding this, you can just type it in the chat section. So let me show you more examples of pullbacks and why the pullbacks are good. So this is another example of a great pullback, and this one I traded myself. I traded this one, and I traded this one. So again, you can clearly see there was this first base formation, and after that there was a strong breakout, and after that there was some bit of profit booking, and the price started pulling back and contracting in a small range. So that is another very good entry point, when the price, instead of going much lower, just starts forming a very small range, very small contraction after a very good up move, right? So this on this day it gave a huge move of around 18%, and after that there was a small pullback, and it just consolidated in a range and waited for its 10-day moving average to catch up, and then there was this particular candle right? And look at the volume combined with this candle. So last 3 days volume was going lower and lower, and then during this particular candle, the volume went a bit higher, and again it never went after that. The price never went below these two particular these two candles low. The price never broke that, and the 10 EMA also caught up, and once the price crossed this particular range, so that is a very good entry point at right at this. When the price is, once you identify a range, you can just draw a resistance level. If the price is tested that particular level again and again, when the price has formed a small range like this, so when the price is crossing that particular range, that is your entry point. With if you are aggressive trader, keeping the stop loss right below the uh, low of the candle, or if you are not an aggressive trader, keeping few points below the very small base formation. Okay, Sula. No, this is not a pullback again, because first it has already violated the both the moving averages, if we look at the short-term moving average. But again, if we want to see the fib retracement levels, so this was the initial gap up point right at this. So we'll use this as the swing low, and this was our swing high at 457 at this particular area. So if you see, it has come down to 68%, right? So there is a chance, but I'll say wait for a confirmation candle at this particular point. Because why is that? Because first it has broken its 10 and 21 day moving average, uh, and there is no small base formation or a quick reversal as well, right? So I'll do is I'll be waiting for a proper reversal candle, something like this candle, which should cross this small contraction area of last 3 days, and then I can keep the stop loss at the candles low, or maybe below this particular base, right? So that is how you judge a pullback. Yeah, so there are a few more examples that I have here. For example, this GLS, that is Glenmark Life Science Services. So again, so there was the initial gap up point here, and the stock was well above the 10-day moving average and the 21-day moving average, and a small consolidation for 4-5 days, and then it tried to break out, but again started consolidating, and then pulled back, tested the 10-day moving average, and came near to the 21-day moving average, and then there was this reversal combined with a small follow-up move. You can clearly see. So I can either buy a little quantity right here, or maybe wait for it to cross this particular range, this small range area right here, right? So that is another way you can add more to the pullback stock, or maybe a stock you're already holding, right? So here is another example, GMDC. So there was this breakout after the base right here, the gap up, and the stock went up 20% that day, and after that the price started consolidating, waited for the MA to catch up. See, again you can clearly see during the down move, during this particular down move, look at the volume activity happening, right? So the volume should be going down, right? A stock should give a very strong up move, and after that the pullback should be very small, right? As I said, 5 to 7% range, the pullback should be between that range, and the volume should be going back down, and wait for the stock to MA catch up to the moving average. It's short-term moving average in case of swings, as I said, for few days to few weeks. That is the 10 and 21 day moving average, and then there was this particular reversal candle, but again there was no follow-up move, right? So you could have suppose you entered you are an aggressive trader, and you entered at this particular reversal candle, right? Keeping the stop loss at this previous candle's low, or maybe even this candle low, right? And there was no follow-up activity, so you will just wait unless your stop loss is hit, but again consolidated, and once the price again crossed that particular range zone, you can add more, because the price never went below this. After this reversal candle here from the 10 EMA, the price never went below it after that. And then there was this again another breakout, and since then the price has again been consolidating and taking support at the 10-day moving average. So I myself entered at this particular point with keeping my stop loss below this small base area, right? So my stop loss is below this small base area, so that is again 4-5%, right? Or even if I want to give it some space, I can keep the stop loss below the 21 moving average, that is this yellow line. uh, and still I'll just lose 6.7 something percent, right? And if I don't want to take that much risk, because again, whatever you are risking, at least you should be making twice of that, right? So if I'm risking 10 rupees here per share, so I should be catching at least a 20 rupees move after that, right? So again, another reason was entering at this particular point is looking at the look at the volume activity. During the pullback, the volume again came down, and look, this is volume activity, and here my stop loss is very well defined, right? As I said, below this particular small base area, right? Yeah, yeah, during the day, if you are active, if you are active, actively trading during the day, you can also go down to the hourly chart, as Siraj said. You can go to the hourly chart or maybe the 2 hourly chart, and you can clearly see what is happening during that time, right? So again, there was this I've gone down to the hourly chart, and you can clearly see this these two candles and look at the volume, right? So again, it is giving you confirmation that there is a possibility of some kind of reversal again at this particular level. So in case of strong stocks, what is a better strategy is that dividing your desired quantity in both the ways, as you said buy at the pullback, example at the 10 or 21 EMA, or wait for the stock to form a base. Or what you can do is you can do both, right? So if you want to buy 100, 200, whatever amount of shares, you can divide that into trenches, right? Enter at the pullback again, because if you enter at the pullback and you got it right, you'll be losing very much at that level, because your stop loss is very well defined and your stop loss is very small, right? And you'll be entering at a good point and you'll get a very good price, and rest you can add once it again forms a base and crosses that. So Talbros Auto. Again, it is pulling back towards this its 10-day moving average, so stock is in a very well uptrend, as you can clearly see, right? And the stock is, so there was some bit of selling here at this particular candle. Look at the volume here, and after that the stock is pulling back with low volume, and it has tested its 10-day moving average multiple times. So again, there is some bit of weakness there. It tried to reverse here, but there was no follow up activity, as I said. So I also posted on Twitter. I entered at this particular level with my stop loss below this particular base, right? So there is a high chance that it may test its 21-day moving average and then gives a reversal. So I'll be just watching it. Instead of fresh entry, I'll be just watching it, observing it. If it breaks down or tests the 21-day moving average, or maybe it gives a reversal kind of move, like this kind of move. So again, I can enter at that point with stop loss below this particular base. So you asked about some of the stocks like Sunflag Iron and Wellspun. So I'll first go to Wellspun Industries. Oh, sorry, India. Wellspun India. Again, you can clearly see a very good kind of pullback setup. The stock was in a very strong uptrend, and there was this huge move combined with very huge volume. And after that, the stock started coming down. And again, now this time it has started consolidating in a range, and it is testing its 21-day moving average. But here what the problem is, every time the stocks try to reverse as you can see, during this candle the volume was also high, and during this candle as well. So every time it tried to reverse, so there was no follow-up activity after that. See, the fell on Friday as well, and before that also it tried to cross, but it fell and tested the 21-day moving average. So what I do in this particular case, once I have identified this particular range, I will wait for the price to cross this particular range right here. So I'll be using this as my breakout level around 97, right? So once, if the price moves higher from this particular level, that would be my perfect entry again, because if I enter at this point, there is a very high chance that it can also cross here, because the stock has been consolidated, pulled back, and since then it has been consolidating, and your short term moving average is also started to flatten. So why take the additional risk? I'll just simply wait for the stock to cross this particular range. So that is also another advantage. After the pullback, if a stock is forming a particular range, that is another advantage you can use to manage your risk, right? So instead of entering at right now, I'll wait for the stock to cross this particular level. I'll add it into my watch list. So you can keep typing in your questions if you have questions regarding this, pullbacks. So this is our main topic today. Yeah, very good. Setup forming here after this range was cleared, a very strong up move, and the stock pulled back, and you can clearly see the long wick candles here. And this again was a reversal candle, and then there was this follow up activity as well. So what I would do in this case particularly, I'll just enter at this particular level with keeping my stop loss below these three lows, right below the 21-day moving average. So that is again not very far, as maximum of 5%, right? That is not very far, around 8 points of gap, right? Again 8 point of gap. So I won't be entering with full quantity here. Instead of that, because again the stock has kind of forming a range, so it is kind of showing the signs of reversal from the moving averages here after the pullback. So I'll enter some of the quantity, 30, 40, 50% here, and when the price crosses this particular range, I can add the rest. And as we discussed earlier as well, once it crosses the previous swing high, you can add the rest of the quantity. So that is how you manage the risk as well, along with trading the pullbacks, by dividing whatever your trading desired trading quantity into chunks, and entering at different points by managing your risk. And as the stock moves up, you can keep shifting your stop loss, right? So if my initial loss is below this 21-day moving average, I'll shift it to this candle's low, and if there's good follow up activity, I'll shift it to this, and if there's a breakout from this range, I'll shift it to that particular candle's low. Ujjivan Financial Service. Again, you can clearly see a very good example of pullback here. The price pulled back, and there was a very good reversal, right? So again, if you identify these type of setups, and now it's at the previous swing high. So again, here I would be waiting for a proper breakout from here, because again this tried to break out but fell back, right? So there's a high chance again that it may test its 10-day moving average, and after that it moves up. So instead of that, I'll just wait for it to give a confirmation close above this level. So in case of Ugro Capital, right now it's just a very good reversal here. We can see there is a early signs of reversal. Last time it tested the 21, and after that there was a reversal, but this time there's early chance of reversal. So again, the trading plan would be simple, by keeping the stop loss, if you're aggressive, at this candle's low, or maybe few points below the 21-day moving average. Again, you have to calculate how much loss you are taking. So this would be very deep. So instead of that would be around this 5-6%, whatever the capacity you have. That you need to have a number in mind, how much you are willing to lose, right? So that also helps very much. Once you have identified how much you are willing to lose per trade, and that should be not more than your 1 to 1.5% of your entire capital in a particular trade. You shouldn't be losing more than that. And also how much you're losing according to the position size, right? So there is a chance of reversal. So if I'm willing to take risk here, with I'll keep my stop loss maybe at the candles low or maybe a few points below that. And once the price crosses this particular area, this 218 something level, because last time the price faced this multiple times resistance, multiple times at this particular point, and there was no follow up activity. So once the price crosses this level, that can be used as the level to add more. So in case of Schand, so it is a very choppy stock. So I'd say let it cross this, this particular range, right? So volatility is very high. If you look at the whole base, this is a 10% base, right? So there is very choppy activity right now. Below, it went below the 21 as well, right? So instead, I'll be using the 50. So in case where there's a very choppy activity, it's better to use the 50-day moving average instead of the 21. So I'll wait for it to cross this particular range before entering this stock. So just type in your questions if you have any questions regarding the pullbacks, whatever I said till now, whatever questions you have. If something is not clear, just type in the chat section, and tell me if you are having any problem. So here is another example of the pullback. So this was already in a very good uptrend from here. From here, it was already in a good uptrend, and then there was the gap up, and after that, the stock just consolidated and tested its 10-day moving average, and then there was the reversal from the 10-day moving average and a good follow-up activity, and the stock went up from 65 to around the 68 level, and then there was again another pullback. Look at the 5 days activity of downfall, but look at the volume as well. Look how beautifully the volume is contracting right along with the price. Well, while the price is going down, look at how the volume is contracting, and then there was this big reversal candle, right? So some of you who are aggressive traders, you might have entered here as well, right? But again, I'll wait for the confirmation, and that too during the as Siraj said earlier, you can go down to the weekly hourly chart during the day if you're active trader, right? And see if the price has started moving. So instead of waiting, I can clearly see on the hourly chart the price has already started moving, and the volume was coming down, and at this particular level the volume started rising, right? And you can clearly see how the stock went after that. So you can come down to hourly as well to identify the pullbacks, a better entry point as well. Okay, Aarti drugs. Okay, so there were. Yeah, definitely. We can also use the weekly chart as well. If you are going for a positional, especially if you are going for a longer move, maybe the um, maybe for a few weeks to few months, then definitely you can go to the weekly chart as well, right? So the principle remains same. Whatever time frame you are using, even if you are using hourly or daily, whatever time frame you are using, you can clearly you know uh, apply these principles on whatever time frame. So somebody asked about the scent, and you can clearly see after this, it's currently pulling back. So there is maybe a chance that it may break its 10-day moving average. So again, I'll wait for the confirmation, right? There was this reversal, right? This kind of reversal. I'll wait for the confirmation here instead of preempting anything. I'll simply wait for the confirmation if the price is willing to go down, or if its price is willing to reverse from this particular level. Aarti drugs. So Aarti drugs, it is kind of getting weaker after this, this after this channel breakout here. The stock was consolidating, and it tried to break out multiple times. If you see here, the price tried to break out multiple times here, and then there was this, but there was no follow activity, and now it's coming down. And you look at the long wicks of these candles, and the prices also started to slide down the below the 10 and 21 day moving average. So unless in this case, I'll simply wait for the stock to cross this particular, because again, you cannot trade every single pullback, right? So if you want to trade, you need this kind of activity, right? Like I traded this myself, and I entered at this particular level, this candle. Again, because you cannot enter every pullback, right? Unless the price gives you the confirmation, like it did in this case, right? So unless the price gives you confirmation itself, there is no point preempting anything, right? Because again, you can clearly see there's clear weakness. The price is giving you no sign of a reversal from here. So it's not like that whenever the price is pulling back towards the 10, 21 or 50 or 200 whatever moving average, or the Fibonacci level you are using, or wait for the price to confirm if it wants to reverse from that as well or not, because a pullback may also convert into a failed breakout if there is no reversal, right? If the price keeps on going down, that is not a pullback, that's a clear breakout failure. So if you have 1 lakh of trading capital, how do much you, so if you are big, that also depends on your skill level, on your identification level, and many other things. So suppose if you are a very beginner, I'll suggest you go for the formula of 10, 10 and 20. So this is kind of a formula that I use myself as well when you have a small trading capital. So suppose you, as you said, you have 1 lakh trading capital. So use this formula 10, 10 and 20. So 10, 10, 20 means 10% capital in each trade, trying to capture a 10% move and repeating that 20 times in a year. So your average will come down to come out, that is 20%. You'll grow your capital, your whole year's return will come at 20%. So if you have a small capital, you can use this, enter a stock with only 10% of your capital, and try to get at least the 10% move, right? So that is a good way to increase your capital. And if you are a very intermediate trader, or you know how to do that, so I'll say, if you have a small capital, try to concentrate as much as possible. That is a very difficult task, but as you learn more and more, and as you get better at this, I'd suggest try to concentrate more. Go with 10, 15, 20, even 20, 30%. You can even go as high 20, 30% in a particular trade, but that only depends on your skill level. First, your identification, how well you can identify stocks at the right levels, and all of that. So maybe that's it for today, right? So if you have any other question, just ask in, otherwise we'll finish the stream here today, right? I'll be waiting for your questions, or maybe we should just end it here. Yeah, so there is this one example of failed pullback as well, right? So here, till this point, the price was trying to pull back, but again, as I said, if the price is not giving you any confirmation, there is no point preempting things, right? So the price never gave the confirmation here, and it started sliding down and down. So same thing is happening in case of the RT drugs. As you can see, the structure is very similar. So unless the price moves like this and gives you confirmation, there's a very high chance that it may keep on sliding down. Yeah, definitely. Yeah, you can risk at least 500 per trade. Yeah, and that is good. So South Indian Bank. So it is a very, currently very choppy activity, as you can clearly see. The gap was filled very soon, and currently it is taking support at 21, but there is no reversal activity. So unless you get this kind of candle which is confirming that there is a reversal possible, right? So there is no point taking unnecessary risk and getting your stop loss hit. So I guess that's it. No more questions here. So let's end the stream. Thank you for watching and thank you for attending the stream. And I hope it added value to your trading or investment journey. And don't forget to comment. I'll add this watch list, the current watch list that I have this of few pullback trades. Maybe I'll add more few names to it which are currently at the pullback. I'll just add it in the description, and you can go through these particular setups and see for yourself how the price behaved. So that's it for today. Thank you for attending. Goodbye. Take care and share it as much as possible.